All right, welcome back, everybody. John Caruso here. Happy Friday to everybody. July 8th, coming to you with a quick pre-market preview here. We do have, we just saw the non-farm payrolls number for June come out. We did see a better than expected number, headline number 372,000. The market was expecting down around 268. We did see the unemployment rate hold flat at 3.6% and wages hold flat at 0.3% month over month. Looks like the market's kind of taking this as good news as bad news. Obviously, this report is going to do nothing to dissuade the Fed from moving at the July meeting. We're expecting 75 basis points. I do believe we are going to see that again here. Stock market, S&P down about 0.50%. We got the NASDAQ down 0.90%. I do have the lower ends of the ranges moving up pretty noticeably here this morning, which could provide a little bit of a tailwind here over the near term for some higher prices in stocks going forward. So we're going to keep that in mind, but we're also going to be mindful of the volume on these up days in stocks. The volumes have been declining. So that's a classic signal of a bear market. So be careful out there if you're chasing this rally. But as I mentioned, we could still have a little bit more upside ground to test. I'm going to give the S&P 500 a chance at 39.50. Oil's up 128 right now. Oil not quite immediate term overbought here, but we're getting close. I still have negative momentum on the oil chart. Obviously, we saw the greater than 20% decline unfold over the last 2 weeks. We are starting to see a little bit of a rally, a little retracement of that downside action. If oil can get up in and around, perhaps I'll give you between 106 and 108, could be an area to look at becoming bearish on oil again here. Gold, 1740 right now. Following the jobs number, we did see an uptick in yields. Obviously, I think the 10-year yield's hanging around 305. I think we might have gotten as high as about 308. So as I mentioned, this report is going to do nothing to dissuade the Fed. We expect higher interest rates to come. The yields markets are bouncing right now. We still have an inverted 2 and 10 spread. Last I looked at that was minus 3 basis points here. Obviously, that's a harbinger for recession to come, and I still believe that is likely going to be the case at some point, either later this year or out into next year. And gold, obviously, gold responds to rising interest rates. Gold, I think we got down as low as 1726. We have since bounced back to 1738. Regardless, gold is going to close the week on a sour note, which is not good if you are looking for a bottom at current levels. I do expect that we are in the last phase of a washout in gold. Anywhere between 1710 to down at 1660, we're going to call that a bottoming zone for the gold market. So keep that in mind if you are long gold, that we could see as low as 1660, we believe, here over the near term before we establish a bottom in gold. So keep that in mind. That's all I have for you here today. Best of luck to you out there, everybody. Enjoy the weekend. We'll catch you back here on Monday.